Hi folks, and welcome to this week's last edition of Who Moved the Market. It's a Friday, we're in good spirits, and I have Rima with me on the show today.
Hi.
Welcome to the Friday edition, Rima.
Thank you, I'm excited.
I want to ask you about your Friday plans, but before that, we have to talk about the one stock that we're going to focus on, and it's a company that Rima has been tracking for a long time, and HCLTech is the one we're looking at. It's the top gainer on the Nifty. Rima, finally some good news, right? For IT, you're clutching on straws when it comes to positive news, and we've got that on HCL today.
Yes, so HCLTech has won a mega deal, okay? By mega, we're talking about a $2.1 billion deal. This is from a US telecom company called Verizon. It's to be executed over the next 6 years, and the revenues from this deal, the incremental revenues, will come in from November of this year, which means in FY24 the company can potentially get 5 months worth of this revenue. So this is a very large deal, which has got the street excited.
Absolutely, and it's coming at a time when, like I said, there's just been so much of gloom and doom and this doomsday kind of talk about IT, just because the companies have been struggling. A lot of the managements have also said no visibility on the future course of near future course of earnings. So in that context, how would you look at this deal? And is HCLTech a big player in this segment in telecommunications and this part of the market?
Well, the biggest player in telecom is Tech Mahindra, right?
Yeah.
It started off as a telecom company before it became a full service provider by getting into other segments as well. So the largest player in that is telecom. Tech Mahindra.
Yeah.
But why this deal is important for HCLTech? Now, HCLTech's Q1 numbers were a big miss. Their revenues declined in current quarter.
Yeah.
They have a guidance of 6 to 8% in terms of a full year revenue forecast, right? They split their businesses into two parts, but the services business, right, which is your TCS, Infy kind of plays, because they also have a products business, the guidance is 6.5 to 8.5%.
Okay.
Right? Forget that. You can just say 6 to 8% is the guidance. If in Q1 your revenues have declined by more than 1%, then how much you need to do in Q2, Q3, Q4 goes up exponentially.
And they didn't cut the guidance. Though the revenue was falling quarter on quarter in the first quarter, they stuck to this 6 to 8%?
They stuck to the guidance because typically companies change their guidance only in Q2. They don't want to keep tweaking their guidance every quarter. Right? So the asking rate for the company in terms of a performance required in Q2, Q3, Q4 was 3 to 4%. So even if the company wanted to achieve the bare minimum growth of 6%, the lower end, they still had to do a 3% plus growth in Q2, 3% plus in Q3, 3% plus in Q4, which is not easy.
It's a tall order given the environment, right?
Exactly. Yeah. So the street was worried that HCLTech is likely to cut its guidance in the next quarter unless some of the large deals convert. So HCLTech held on to its guidance in the in the June quarter, because they said, our order pipeline is at a record high level. HCLTech, because it brings them closer to the company, or it keeps the hope alive that the company will be able to achieve its full year guidance. Whether they do or do not, we can't comment now.
Yeah.
But I think that fear that the company will definitely have to cut its guidance, that is abated a bit.
And it also instills some confidence, I guess, in in the minds of shareholders that obviously they saw this coming, and now we know why they didn't cut the guidance in the first quarter.
No, they don't cut the guidance in Q1. They always say in Q2, right? You don't want to keep going up and down, little bit here and there. So the standard thing is HCLTech says, we're not going to change our guidance. Even if Q1's been bumper, they will not come up and upgrade it in Q1. They'll say, let's 6 months go by.
Let's see how the another quarter does.
Exactly. So typically it's mid-year.
Fair enough. You also did speak to the management about this deal. So what are they saying? What's their expectation, and how does it flow out?
Well, for starters, they told me this is the largest ever services win for the company, right? In terms of a deal size, this is the largest ever win. I specifically asked them that, does this deal help you achieve your guidance? And they said, we stand by our revenue and margin guidance. I think that is the key takeaway. I tried to quiz them on the margins because JP Morgan's a bit worried that it could be margin dilutive. But, they didn't really say anything about the margins in this deal.
Did you get anything else from them in terms of, can this be a sign of better times ahead? But I guess that's hard to say, right?
It's hard to say. And we didn't have the CEO talking. We had the Chief Growth Officer. I think he was told specifically just talk about this deal.
Just talk about this deal. Okay, fair enough. But then just to go back and to look at the profile of the company, like you said, the first quarter has been a little weak, but it's not HCLTech alone. Overall, we're coming, off a quarter where the environment continues to be, very challenging. Just jog our memory and remind us in terms of how HCLTech stacks up against some of its similar sized peers, given the environment, given the way things are shaping up this year?
So, across the board, Q4, Q1, I mean, 2 consecutive quarters have been weak for the IT industry. Particularly this quarter, HCL Tech didn't do so well. The best performer was actually TCS with a flat revenue. No growth revenue was the best. Was the best performer.
Zero growth was actually great.
It's been the others declined, right? HCL Tech, declined. So in that context, HCL Tech's performance was also pretty weak, but the company held on to its guidance, and this now gives them a lot more confidence. And I think the bigger telling point is that we're so worried about the US macroeconomic environment, right? But even in such an environment, companies are signing on to large deals.
Correct.
Right? Maybe today is HCL Tech, but tomorrow, if the consumer confidence, the corporate confidence improves, you could have other large deals which are in the pipeline, but they're not getting signed on the dotted line because you just want to wait to, you're waiting for the bad news to pass. Right? So I think it's an important sign from, the corporate environment.
And I guess also, I think the BFSI vertical has been, fairly weak for a lot of Indian IT players. So at least it's reassuring to know that some of the other cylinders, some of the other verticals may fire, like in this case, telecom for HCL Tech, right? Any other thoughts from the street? Any broker views? You said JPM is a little cautious on margins.
So we got 2 of them. One is Morgan Stanley and the other one is JP Morgan.
Okay.
Morgan Stanley is overweight on HCL Tech. I think the target price is about 1,200 rupees. So slightly higher than where the stock currently is. They indicated that, again, that now the possibility of the company cutting the lower end of the guidance, cutting the guidance has receded a bit. Right? That was their key takeaway. And they believe this deal will help the company reverse some of its underperformance. JP Morgan has been cautious on the entire IT pack. So you have to always take their views with that bias in mind. But they believe this deal could be margin dilutive. Now, again, it's too early to say, but the reason why some of these deals could be margin dilutive is that, so they're taking on the entire business of Verizon right? So Verizon business, Verizon is a telecom company, right? They provide network, they provide, the entire telecom services to any enterprise, right? And not just your B2C, even B2B.
B2B,
correct? So, that entire architecture that you need, your Wi-Fi, your SDN, etc., is provided by Verizon Business. Now, HCL Tech is going to take over the entire business. They're saying that, the cost, all the people associated with Verizon Business will be managed by us. So you get revenues, but you also get the costs associated with it, the employee cost. So in such deals, it's hard to estimate what the margins are. Sometimes it could be dilutive, but if you can bring in automation, you bring in Gen AI, who knows, you bring in efficiency, effectiveness, margins could improve, right?
I think,
But I think it's still a call.
It's a concern.
It's a concern which is flagged off by JP Morgan that it could be potentially margin dilutive.
I guess margin dilutive, margin accretive is a secondary, point right now. First is just get the deal, right? Get that top line moving, and at least on that one front, HCL Tech has scored, and we're, leaving the weekend or leaving the trading week, getting into the weekend at least on some positivity.
On some positive note for HCL Tech and the entire industry.
Okay, now folks, I'm going to ask Rima about her weekend plans, but that is not on camera. So we will leave you to enjoy your weekend. Thank you very much for being with us through the week and following all our market conversations. Have a great one. We'll see you again on Monday.